It is incredible how nuclear and therefore uranium is now being broadly more accepted into the clean energy, the green, the decarbonisation conversation.
Hello, and welcome to another one-to-one mining investment APAC online content session. Today, to speak on uranium's role in decarbonization, we have Guy Keller, Portfolio Manager for the Tribeca Nuclear Energy Opportunities Fund at Tribeca Investment Partners.
Thanks for having me. It's good to be here. I hope all is well from wherever you're all tuning in from. So for those who don't know me, my name's Guy Keller. I work for Tribeca Investment Partners. We run a global natural resources business here. As you can see on this slide, we're a boutique fund manager. We're based out of Sydney with office in Singapore. And the whole team has come from a very diverse background in resources. Our strategy in the nuclear energy opportunities strategy is sort of broadly mirrors our bigger business in the global natural resources. You know, we're an active manager. We're fairly flexible in our mandate. We look globally and not just for equity, but other opportunities in the space. Now, more specifically on our strategy, I mean, this is something was not able to say 3 years ago. The Tribeca Nuclear Energy Opportunity Strategy is invested in the clean energy sector. Had I tried to make that comment 3 years ago, it would have been laughed at. But it is incredible how nuclear and therefore uranium is now being broadly more accepted into the clean energy, the green, the decarbonisation conversation, so that we can make a statement like this and people sort of nod and say, yeah, that makes sense. And it's true. I mean, we own companies that produce fuel for carbon-free energy and electricity, and being uranium. And that's what we focus on primarily in this strategy as we are more mining specialists. You can see here, we've been around for just over 3 years, and it's a pretty impressive track record on this fund. You know, I'm going to talk a lot about history and things that we've seen before in this sector. And if you are a study of history, you realise that we are at the very beginning of the emergence out of a 10-year bear market that was largely forced upon the sector, and there's a lot of catch up to move forward. When we look more broadly at, from a global natural resources perspective, our batting order and how we view the world, you can see there that uranium is up in that top right corner of this, which is where you want your commodities to be for your most favoured. The one thing that you should notice there is that we've got a real bias towards the electrification and decarbonisation resources, and that's two of the big themes that we run with in our broader look at how we're looking at the global natural resources world at the moment. Uranium, nickel, copper, cobalt, lithium, aluminium, they're all extremely important commodities for the world who, you know, the globe has declared a war on carbon, and these will be essential in that fight. When we bring that down to the fundamentals of uranium, we're just going to touch briefly on this before moving into more broadly some of the things that are happening in the nuclear sector. You know, one of the reasons that uranium sits up in that top right corner on top of that decarbonisation and electrification mantra is the supply and demand mismatch here. I mean, this is a WNA forecast from their nuclear fuel report in 2019. You can see here that they have 3 scenarios of demand. The lower scenario, there's a lot of things that need to go right in the next 5 to 10 years just to meet the demand of the lower scenario. I mean, you look at this, it's not only current capacity. So one of the big problems or one of the big things that excites us is that there is a primary mine supply deficit in that the uranium produced every year is not enough for the demand of the existing nuclear fleet. Just let that sink in. The existing nuclear fleet does not have enough mined uranium each year to survive. So therefore, it's coming from secondary and inventory. When you look at these demand scenarios, the lower scenario, as I said, you need care and maintenance mines. So first of all, you need the tier one assets that are being idled. So Cameco and Kazatomprom, the two largest, lowest cost uranium producers, have tier one assets idling at the moment because the price is not high enough to allow them an incentive to bring those pounds to market. So you need those to come back. You need other idle capacity. There's a lot of care and maintenance pounds that have come offline in the last 10 years. Plus, you need the planned and prospective just to reach the lower scenario. So, I mean, it's a really, really big mismatch here in that basic fundamental supply and demand. This is a chart that comes out in various forms around the traps. And as you can see here, this is the mined uranium that is currently in production or idled. You can see there that the grayed out sort of boxes are idled capacity. In fact, Ranger is now, which is over there towards the right. Ranger is now offline, and you can see Sommer and Comignac in Niger. The Comignac mine's now offline as well. So there's two sources of uranium that are no longer there. But the big point about this cost curve is that the medium-term incentive price to bring, what's that, 170 odd million pounds to the market is $60. We're currently in an environment where the uranium price is 31, with a long-term contract price supposedly reported at $32.50. So there's a long way to go for the price to catch a bid in order to get to a level to incentivize these pounds to be profitable, let alone new pounds to come to the market. Price is a big thing. You've seen from the performance of the fund over the last year, almost 500% return there, that something is going right in this sector. And that has been that the uranium, especially the juniors, have rallied strongly in anticipation of this bullish thesis playing out. You can see here when we look back, the uranium market has been around a long time, and so we do have history. And you can see here before 1997, there was decades of sub $20 uranium price. It was largely government, state-owned entities owning mines, owning the whole process through from mine to reactor. But as we could see in between 2004 and 2007, when that price moved, it was a very aggressive move higher. We then had obviously a 10-year bear market forced upon us from the accident at Fukushima that arose from the tsunami tragedy in Japan. And we're coming to where we see the end of a 10-year bear market. So, and again, the $60 price there, it still needs to double to get to that price to bring pounds to market to satisfy that supply and demand deficit. We talk history. In the top right here, you can see we've sort of charted the spot price move from 2004 to 2007, and more recently, the move that's ongoing from 2019 to 2022. And, we like to draw some the parallels to history. One of the big changes, apart from the big supply-demand fundamental difference this time, is there's a huge amount of regulatory support coming out as global governments recognise that decarbonisation, that nuclear, electricity is an essential tool in the war against carbon. China and their 5-year plan. We'll talk about China in a little bit more depth in a few slides' time. Nuclear is part of their long-term energy mix. It has to be. The Biden administration, more importantly, it's the first time a Democratic administration has come out in support and in public support of nuclear. They are recognising that at a bare minimum, they need to maintain their existing nuclear fleet. We'll touch on that in a second. And the European Union. The European Union is in the process of including nuclear power in what they call their taxonomy, which means that it will be, assuming it passes, legislated into EU law that it is a sustainable and green source of electricity alongside the weather-dependent sources like solar and wind, which opens up a huge pool of finance available for future projects, finance for extending the life of existing reactors, and gives the European reactors much more confidence in that they will be an essential part of the European grid going forward. When we look at history here again, this year alone, we estimate there's been $350 million raised to buy physical pounds in the spot market. In the last bull market, at the beginning of that bull market, it was financial players, hedge funds, financial vehicles set up to buy physical pounds. The bullish difference this time is that West do that. It's unprecedented. Uranium juniors are raising money, so the equity market is giving them that license to go and buy pounds. And the big difference this time is that those pounds, unlike last time where hedge funds lent those pounds out for some money, it got to a price point where they're happy to sell them. So the utilities worked out that there was a little bit of a free carry there, and hedge funds were doing some of the heavy lifting for them, and they would be able to get those pounds back. This time, in our view, those players buying those pounds are using them for leverage in their negotiations to get themselves financed and off-taked into production. So those pounds aren't going to be easily available back to the market. And in the last bull market, it got to a point there where that squeeze on the physical then started to move that price. We haven't seen that yet in the uranium spot price. And we think that the recent announcement with the Sprott ETF vehicle taking over one of the physical vehicles, Uranium Participation Corp, which has been a long-standing vehicle in Canadian listing, holding a lot of physical pounds. It's transformational for a number of reasons, because there will be no doubt a raise in the US to fill out a share count on that listing, which will require pounds to be bought. And if the rumours are anything to go by, that could be anything from 7 to 20 million pounds. So we're not talking a small amount of uranium here. We're not talking 3 or 4 or 500,000 pounds. We're talking the almost a MacArthur River annual output worth of uranium that may have to be bought. But also, more importantly, is that vehicle being more like a gold or a silver ETF means that as those shares, the demand comes in to create those shares, that vehicle will have to be in the spot market to buy those pounds. The difference to gold and silver, for example, is in the gold and silver, the ETF can go and buy some futures to give themselves some time to go and source the gold bars or the silver bars. There's no viable futures market in uranium. So it means that this Sprott vehicle is going to have to be in the physical market almost daily when demand's there, trying to find pounds. And so all those games and the murkiness around that spot price discovery will dissolve, and we'll have a much more transparent and efficient mechanism in which to observe that price. And in our view, that's looking to be sometime in the Northern Hemisphere summer, probably June, July. When that comes to market, it's going to be transformational for that spot price. So we'll start to see that follow that 2004 to 2007 price trajectory. Now, we talked about the Biden administration and why they've done their simple mathematics. And part of the big reason here, as you can see, the nuclear fleet provides 20% of the USA's electricity per year, but it's responsible for 55% of the carbon avoidance. In 2017, you can see there the nuclear fleet avoided almost 500 million metric tons of carbon dioxide emissions. I mean, that's massive. And it doesn't matter how much weather-dependent electricity generation capacity you build, getting rid of or allowing that nuclear fleet to shrink in the USA just means that decarbonisation, those decarbonisation goals of the Biden administration become very difficult. I mean, a perfect example is more recently, there were 2 reactors in the United States where construction had halted for various reasons. Those 2 reactors are now looking to complete in the next 2 years. Those 2 reactors alone in Virginia will avoid more carbon than the 7,000 wind turbines in the state of California. 2 reactors. Over their 60-year life, there's almost 600 million tonnes of carbon that will be avoided just from those 2 reactors. Remember, the nuclear fleet is around 100 reactors. This is 2 of them, basically avoiding more carbon than the whole state of California's wind. You can see here as well, China, which we'll move on to in the next slide in a bit more detail. It was only 4.2% of their total electricity generation was nuclear. They have embarked on reiterating that nuclear is a very important part of their mix, because if they were to shut that down or to stop it completely, you could see here, they'd have to burn an additional 90 million tonnes of coal to replace that nuclear power. When I said before, we're investing in the clean energy sector, and I said 3 years ago that would have been laughed at. You can see here now the conversation around nuclear and climate is becoming much more mainstream. Bill Gates obviously had just written a book, was doing a lot of advertising and marketing for that book, but he made a number of comments in some pretty serious 60 Minutes and a lot of mainstream news outlets in the US, where, instead of people sort of jumping up and down and saying, wow, what's he talking about? It was just a nod. Yeah, okay, that makes sense. He's right. Yeah, I understand that. It does make sense. So this is, I think, the difference this time around as to why nuclear is becoming more mainstream. It's because there are people like Bill Gates who are saying, grabbing the world and saying, you need to consider it at the very least. You need to seriously consider it, because if you are serious about removing hydrocarbons from the electricity mix, being largely coal and to a lesser extent gas, there's no other viable source of baseload electricity on current technology. I mean, we can prophesize all we like about battery storage and carbon capture and what have you, and how that's going to change the future, but the reality is that technology is not there on scale. China, 2060 seems a long way away. In that time, China needs to neutralize 10 billion tons of carbon. As you can see from this chart, power is a massive part of that. And whilst they were very aggressively announcing some massive scale weather-dependent capacity build-out with wind and solar, that's not going to do anywhere near the amount of carbon reduction that they require. Even when China model out their electricity mix to 2040, coal is still a big part of that electricity mix, because they need to replace that base load with other base load, because the capacity build out to replace it with weather dependency is massive. So they've reiterated that they're going to continue on their nuclear build from 52 gigawatts of installed capacity in 2020 to 70 by 2025. The think tanks are coming out with some massive numbers. When we look at that WNA demand profile that I put up a few slides before, the big surprise to the upside is going to be China. They've been doing a huge amount around their own reactor design, the Hualong 1. They have this year announced a whole bunch of new builds that were on the cards. However, the market was worrying as to where that was going to be. And the reason was they had their first Hualong 1 that they needed to connect to the grid safely to make sure that it was commercial, that it was doing what it was doing. But also in the background, all of those nuclear reactor component builders have been beefed up. So Beijing's been in there making sure that they have the capacity to build the parts necessary to properly scale out this this reactor build program. I mean, it's the biggest reactor build program in decades going on at a time where mine supply has been non-existent. Mine supply growth has been non-existent, if in fact going backwards, because a broken price mechanism has just not incentivized anybody to come to market, and the only buyer, being utilities, have been complacent in the idea that they'll be able to get the pounds when they need them. Now, if we move on to another reason why I think, some other reasons that people are starting to get more comfortable with nuclear power, and this is a fantastic slide. You look at the capacity factor and the land use around the scale you need for electricity. So the standard unit is around 1 gigawatt nuclear plant. The 93% capacity factor means that it basically produces electricity 93% of the time. So if you look at that on a days in the calendar year, for example, it's around 330 odd days of the year a nuclear power plant is producing electricity for the 24-hour periods of those days. To get the same amount of electricity, if you look here, you need 11 million solar panels or 939 wind turbines. So again, the land use here, when you want to replace coal in a country like China, that's where the electricity demand is growing year on year every year, so you have to install new capacity as well as replacing capacity. Nuclear has to be considered. And then when you look down here with old Elon, he makes an extremely good point. We all know about the crypto craze, and on one hand, some of those crypto crazy investors are sitting there going on about crypto. On the other hand, they're also potentially sitting here talking about saving the planet and decarbonisation and ESG and what have you. And what they don't understand is that in investing in crypto, they're actually not helping the environment, because there's a lot of coal-fired capacity being burnt to create those cryptos. So, it's just an interesting sidebar there as to, what needs to happen there. And I know, for example, there's some people in the Twitter sphere talking about using some unbooked nuclear capacity in the US to launch a green coin. So it'd be interesting to see what happens there as well. Again, the talk about energy density with respect to the commodity that you have to pull out of the ground. So we talked about this gigawatt scale nuclear plant, 1,000 megawatts here we're talking. So to produce that 1,000 megawatts of electricity, which it'll power, that electricity will power around about 1 million homes. To do that, a nuclear power plant would consume 3 kilograms of uranium. 3 kilograms. The equivalent coal-fired generation to power those 1 million homes is 10,000 tons of coal. When you look at the energy density here, I mean, the amount of electricity that a very small amount of uranium can produce is mind-boggling. So again, how it cannot be considered when you are serious about the war on carbon and wanting to marginalize coal as a source of electricity. You've got 1 kilogram of coal producing 8 kilowatts and 1 kilogram of uranium producing 24 million. I mean, again, simple mathematics. And of course, it comes down to mining footprint as well. ESG, land use. Almost 50% of the mined uranium is via in situ recovery. So on the left-hand side here, we could see an aerial photograph of Boss Energy's Honeymoon project in South Australia. In situ recovery, which basically means at the top of that photo, you can see a whole lot of pipes and a few wells. So they basically drill a few wells, they insert a solution, they leach the uranium out and bring it out at the other end, and they replace that groundwater back to its natural state. compare that on the right-hand side with a thermal coal mine, and you look at the land use there with massive open pits, problems with coal dust blowing into neighbouring farmlands. And you can see again an argument there from an ESG perspective is that, absolutely in situ recovery uranium projects should be getting lots and lots and lots of green ticks. And then finally, I just wanted to touch on a new technology, hydrogen. I get a lot of pushback that nuclear technology is redundant because hydrogen is going to replace or hydrogen is going to enter in a big way to solve some energy problems going forward. There's no doubt that hydrogen has a place to play, and we view, this is around cogeneration, and there's plenty of Chinese think tanks doing work on this, which means obviously that the Chinese are serious about it, and there's also some research coming out of North America and Europe, and that is, there is a role for hydrogen, and you pair it with nuclear, that it solves that green issue. At the moment, we've got blue hydrogen coming from hydrocarbons, which is less carbon intensive, taking it from coal and gas than it is burning that coal or gas. And there's lots of talk about electrolysis. So remember, if it's green, it's electrolysis. It needs electricity. And with the capacity factors we talked about earlier with weather-dependent electricity, you can't run an electrolysis on solar power when you're only getting 30% of the time is when you're getting your solar electricity. However, if you can cogenerate here, the other thing as well is it needs very fresh water. So where you place your solar panels may not be a place where there's a lot of fresh water available for your electrolysis. So you then got the issue of having to transport either that electricity to your desalination plant and electrolysis, or try to find some other solutions. So when you look at this, instead of it being one versus the other, weather dependency versus hydrogen versus nuclear, we actually think that there's a wedding of sorts in the future grid planning where all of these sources are going to be required to work alongside each other to win that war on carbon. So we'll leave it there. This is just a very quick summary of our fund. It's an Australian wholesale unit trust. We are open for quarterly applications, and there's just some details there as to management fees and performance fee. And as we said, it's a very exciting sector. As a firm, not only do we have uranium exposure in this strategy, but at our Global Natural Resources Fund, which also includes our ASX listed LIC TGF, we run about a 20% exposure to uranium in those funds as well. So it's something that we've spent a lot of time looking at, and we've actually got a number of strategies invested in, because we think that this is something that is only going to get more important as the world wakes up to what they need to do to achieve net carbon zero. So thank you very much for your time. I hope you found this useful, and I am around if anybody has follow-up questions offline. Thank you.